94%. That's how much of his Amazon position Stanley Druckenmiller just dumped. In a single quarter. One of the most respected macro minds on Wall Street just made a massive conviction call. And most retail investors haven't even noticed yet. Here's what's really going on. And why it should make you take a hard look at your own tech allocation right now. Druckenmiller's fund, Duquesne Family Office, liquidated roughly 94% of its Amazon stake in Q3 2024. Gone. Nearly the entire position. Erased from the portfolio in one move. This isn't a trim. This isn't profit-taking. This is a conviction reversal from a man who predicted the dot-com crash, navigated the 2008 financial crisis, and has averaged over 30% annual returns across 3 decades. At the same time, and this is where it gets interesting, Druckenmiller made his first significant move into a semiconductor stock in 8 years. 8 years. That's not a rotation. That's a statement. The chip stock? NVIDIA. He initiated a new position in NVIDIA, a company sitting at the absolute center of the AI infrastructure build-out. The same AI build-out that is pulling hundreds of billions of dollars in capital spending from Microsoft, Google, Meta, and Amazon itself. Let that land for a second. Druckenmiller is selling Amazon, a company spending massively on AI capex, and buying the company that's collecting the check for all that spending. That's a move from the consumer of AI infrastructure to the supplier of it. And historically, in any technology cycle, the picks and shovels play outperforms the end user. Every single time. But here's what nobody is saying about this yet. Druckenmiller isn't just rotating sectors. He's making a macro call on where the margin expansion actually lives. Amazon runs razor-thin margins on AWS relative to what the market price is in. NVIDIA is printing 55% plus gross margins on the most in-demand silicon on the planet right now. When a macro investor of Druckenmiller's caliber moves from low-margin infrastructure spending to high-margin infrastructure supply, that's not a stock pick. That's a thesis. He's betting the real money in the AI trade isn't who builds the cloud. It's who builds the chips the cloud runs on. 1. Audit your Amazon weighting. If AMZN is more than 8 to 10% of your tech allocation, Druckenmiller's exit is a signal worth taking seriously. Not a sell order. A gut check. 2. Look at your semiconductor exposure. If chip stocks represent less than 15% of your tech holdings, you may be underexposed to the single highest margin segment of the AI trade right now. 3. Watch NVIDIA's next earnings report. Q4 2024 guidance will tell you whether Druckenmiller's timing was right or early. Druckenmiller just told the market he trusts NVIDIA more than Amazon to win the AI decade. Agree or disagree? This video is for educational purposes only, not financial advice. Always consult a qualified advisor before making any investment decisions.